well, we're now clearly building projects, those generation projects. We're going to look to close further generation projects, and Etana, our trading vehicle, is pointing towards those material revenues from trading that electricity. And what we've got here within the renewable business is significant first mover advantage in a large and growing market.
Hello, you're watching Proactive. I'm joined by Julian Morris-Williams, Chief Financial Officer at Chariot. Julian, very good to speak with you. Chariot's out with two announcements this morning. Could you give us a brief overview of them, please?
Great to be here, Stephen. Yes, so two big announcements today for Chariot, and both of those announcements are in respect of our renewable business in South Africa. The first announcement is that we've reached financial close on two large wind projects in South Africa, and Chariot has a material stake in both of them. The second announcement is how we're paying for it. So the financing that sits behind it, where we've managed to fully finance our stake. We brought in a strategic partner, and we've done it all at the subsidiary level. And this is a financing which is around $100 million net. And it's important to note, as I said, there has been no dilution at the parent company level. And it also gives an implied valuation for this side of the business, a business which is growing rapidly and is effectively a disruptor in a large energy market.
Julian, before we get into more details of the deals, could you give us a quick reminder of your renewable power business?
Absolutely. So our business in renewables is primarily focused in South Africa and specifically on electricity trading and renewable power generation. On the trading side, the trading is delivered through our joint venture that we co-founded called Etana Energy. And Etana has a license to buy electricity off multiple large renewable generation projects, so wind and solar, transmit that electricity through the national grid, and then on-sell it to multiple large commercial and industrial customers. It's a really scalable business because there's high demand in South Africa for competitively priced and sustainable electricity. And then with the generation projects that we've closed today, both the generation and trading, we're bringing together something really quite special within Chariot, pointing towards now two material revenue streams.
Can you give us some more detail on the generation projects that have now reached financial close, Julian?
Of course. So the two projects, Zen and Berg River, are both located in the Western Cape in South Africa. They're a little bit under 200 megawatts of installed capacity. So these are large utility scale projects. They're being led by a group called Acciona, which is the world's largest pure play renewable group. And Chariot Generation and Trading, a new business subsidiary that Chariot has set up, owns 24% of these assets. The construction is going to commence imminently with commissioning of these projects around mid-2027.
Julian, can you provide an overview of the financing announcement, please?
Yes, of course. So the financing, which is multi-layered financing, as I said, it's around $100 million net, and it has three main objectives. First of all, to fund our stake in these generation assets. Secondly, for us to retain control of the renewable business. And thirdly, for it to be done at the sub-level so that we don't have to take dilution at the parent listed level. And we've achieved that through, first of all, project finance debt, which is done at the project level of a gross $284 million from Standard Bank and Investec. We then brought in a well-known, well-respected South African fund called Maklaco, who have invested $17 million at the subsidiary level. And then finally, we've got a mezzanine facility of $9 million. So that's mezzanine debt, also provided by Standard Bank at the subsidiary level. And it's important to worth noting that this is all non-recourse, ring-fenced financing at the subsidiary and project level.
Julian, finally, what should investors expect to hear from Chariot as we head into 2026?
So 2026 is all really about getting both the renewable business and the upstream oil and gas business to real material revenues. For the renewable business, well, we're now clearly building projects, those generation projects. We're going to look to close further generation projects, and Etana, our trading vehicle, is pointing towards those material revenues from trading that electricity. And what we've got here within the renewable business is significant first mover advantage in a large and growing market. And then on the upstream side, oil and gas side of the business, it's all about getting production. So on our current portfolio, we're resizing our Moroccan gas development and we're partnering. In Namibia, we're looking to progress our negotiations on the license. And then also, we're actively looking to buy oil production, bringing barrels onto the book, looking to generate revenues. And so both sides of the business, as they continue to grow, we're potentially also considering separating the two. So having a separate vehicle for upstream oil and gas and a separate vehicle for renewables. And a step towards that was our recently announced negotiations that we're having with ACWA Power about creating a wider Southern African sustainable energy business. So 2026, in summary, it's about execution, it's about revenues, and it's about unlocking shareholder value.
Sounds like an exciting year ahead, Julian. Thank you very much for the update today.
Thank you.
Julian Maurice Williams, Chief Financial Officer of Chariot.